How's it going today, guys? So today we're going to be talking about whether or not Netflix stock is overvalued or if Netflix stock is in a bubble. It's one of the stocks I constantly get questions about in the comment section below, or I get people sending me messages on Snapchat or Facebook asking about this stock. And the reason why people are asking this question is because of this right here at the bottom here. This is the year-to-date return of Netflix stock, and we're going to compare that quick to the New York Stock Exchange FANG Plus. That is a new index they are offering, or it's an index. I think there are actual index funds you can buy that give you exposure to that, but the FANG Plus New York Stock Exchange Index is Facebook, Amazon, Netflix, and Google, and then 6 other tech companies like Twitter and I think Alibaba are in there. But when we compare the return of these two stocks, particularly Amazon and Netflix, to the return of this index, we understand why people are asking this question. So year to date, the New York Stock Exchange FANG Plus Index has returned 20.8%. This is from January up until today, sometime in March when we're watching this video. So that alone is unbelievable to see a 20% return in just over 2.5 months. And then we consider the fact that in that same time frame, Amazon stock is up 34.8%. That is absolutely insane as well. But then we look at Netflix stock, and Netflix stock is up 60.8% in 2.5 months. It makes you ask these questions of, is Netflix stock in a bubble? Is Netflix stock going to crash? What is going on with Netflix stock? As an investor, I like to see a gradual appreciation over time with a stock. You know, I was in on Amazon. I made a lot of money with Amazon. It gradually appreciated. Now, the returns were still stellar, but it wasn't anything crazy like we're seeing here with Netflix. If I was invested in Netflix and I had a 60.8% return in that time frame, I would be selling. I would be getting out of that. Anytime I have more than a 20% return in the short term, I'm taking my money off the table. I don't care. I know it's short-term capital gains, but I'm taking my money off the table anyway, because that's when I begin to worry, is when you see numbers like this. Now, there are a lot of people asking whether or not it is overvalued or in a bubble. And as of making this video, the short percent of float was around 7.5%. So most people are still bullish on this stock. There's not a lot of investors shorting this stock, and there's not a ton of bearish pressure. But it's numbers like this that are beginning to scare certain investors. But let's go ahead and talk more about this and look at some of the numbers. And the only way we can really compare this stock as far as whether or not it's overvalued, if we compare this to the overall market, then absolutely Netflix stock is overvalued. But you have to understand, two stocks in particular, Netflix and Amazon, operate as if they're in their own market or in their own realm or reality. So when we compare the stock to Amazon, it doesn't seem like it's overvalued when it's trading the way Amazon is. But anyways, let's talk about Netflix first. It has a market capitalization of $140 billion. They have a PE of 227. So that means that you are currently paying $227 for exposure to $1 of company earnings. Now the forward PE is still a 77, but the price to earnings to growth, or the PEG ratio, is just a 1.5, which is quite low. Now when we look at Amazon, Amazon has a price to earnings ratio of 350. They have a forward PE of 104 and a PEG of 7.9. So when you compare those numbers to Netflix, Netflix looks like a bargain. But you have to understand that Amazon stock is trading in some crazy realm as well as far as these valuations, because these are two companies that are absolutely dominating. I mean, there's no company out there that has been as dominant as Amazon is, and that is why the stock is priced up the way it is. So really you have to compare the stock to Amazon and say, okay, compared to Amazon, is this stock overvalued? And if you believe Amazon is overvalued, then you probably think Netflix stock is overvalued too. But if you compare stocks like Amazon and Netflix to the overall market, there's no question asked that these stocks are overvalued. But let's go ahead and talk about why Netflix stock is priced the way it is right now. Why are we seeing a PE of 227? It's because they're reporting numbers like this. So in 2017, they reported that streaming revenue grew 36%. They had 24 million new members, and they saw global operating income more than double. So when they're reporting stellar numbers like this, that is why we're seeing that stock appreciate the way that it is, because these numbers are absolutely insane as far as seeing 36% growth in revenue and doubling or more than doubling operating income globally. These numbers are absolutely insane to see that. So we see that there's huge growth potential with Netflix. Now, what's interesting as well is if you look at what analysts think about the next 5 years for Netflix as far as their anticipated growth, they are expecting Netflix to have 80.9% growth per year, for the next 5 years, which is, again, absolutely insane. But they're expecting Amazon to have 24% growth over the next 5 years. So both of these numbers are very, very high. Seeing double-digit growth like that is fantastic. But if you look at the difference between Amazon and Netflix, it shows you that Netflix has a lot more growth expected than Amazon. So that is why you see the PEG of Amazon is significantly higher, because there is less growth expected from this company. But these are two growth beasts. You cannot deny the fact that these companies have a very strong track record. They have a lot of growth potential. But at the end of the day, you have to ask yourself a question, and that is, are you comfortable with these numbers? Are you comfortable with a price-to-earnings ratio of 227 or 350 and a forward PE of over 100 in the case of Amazon, or 77 for Netflix? Are these numbers you are comfortable with as an investor? Personally, these are numbers that make me concerned. These are numbers that I am concerned about, and a lot of people know I sold off my shares of Amazon. I mentioned the reason for that over in Stock Radar, my weekly stock analysis membership site. I talked a little bit more about that, but I sold off my shares of Amazon. I've never held Netflix, but numbers like this certainly do make me worry. But anyways, guys, that's going to wrap up this video. Please let me know in the comment section below what you think about Netflix stock. Do you think it's an overvalued stock? Do you think it's a bargain, or somewhere in between? If you guys enjoyed this video, please drop a like. If you're new to my channel, please consider subscribing to be notified of any future uploads. And as always, I thank you for taking the time to watch this video. If you are interested in learning more about investing in the stock market, I've created a free course just for you. The link is in the description below. Here are a few other videos you might enjoy as well.